Welcome back to the Dividend Diplomats YouTube, everybody. You got Lanny the Manny over here. You got Bert the Hurt. We are the Dividend Diplomats, and we are excited to bring you another Dividend Battle Royale, Showdown, whatever you want to call this. It's going to be two companies head to head.
You know the drill. Smash that subscribe button. Give Bert and I a thumbs up as we bring you another Dividend stock showdown between two Dividend Goliaths in the Aerodefense and defensive industries, baby.
Yeah, we cannot wait to deliver this showdown to you. So what we do, and we've done this many times now on our YouTube channel, we find two great dividend growth stocks, pit them head to head. We compare their metrics against one another because we want to know what company in that sector is the most undervalued and the best dividend stock to buy today.
And that is exactly what we are about to do. We wanted to find two long-term dividend growth stocks in that same industry, and we wanted to present you the battle between the two amongst the three dividend stock metrics from the Dividend Diplomat stock screener. And what are those three metrics, Bert?
All right, it is the price to earnings ratio, the dividend payout ratio less than 60%, but we are always looking for that perfect dividend payout ratio of 40 to 60%. And last, that third metric is the dividend history, where we're going to look at the dividend growth rate and then how long these companies have been increasing their dividend. But wait a second, Lanny, in our Royales, don't we have a bonus metric?
We bring you that bonus metric. It's pretty much if we're even keeled over here, we're going to bring it out. And that's going to be the dividend yield. And we don't look at the dividend yield first. That's more of the cherry on the top. That is to see which company here edges the other one out. Because again, you're investing in the dividend stocks because you're looking for that form of passive income in the form of dividend income on that journey to financial freedom.
Exactly, Lanny. Those are fantastic points, and we cannot wait to start diving into the metrics here. But first, we should probably introduce the companies in here. And there's a reason why I want Lanny to go first in introducing this company. That's because this is one of Lanny's very first dividend stocks that he purchased. So I think we should let him do the honors with introducing company number one.
Thanks, Bert, and I appreciate it. Yeah, the company that'll be in my corner is a dividend stock that I've owned for the better part of 10 years. Again, I'm not that old, but 10 plus years ago, I've held it.
You are older than 10, though, so this is...
I am older than 10. Now, again, we're looking at the Aerodefense industry, and there are a handful of dividend growth stocks in this industry. And it's not just aerospace defense. I mean, it's anything from security, technology surrounding security, and defense. You know, we're talking private and governmental contracts that these two companies that, you know, Bert and I will have in our corners that will go head to head. And they also go head to head as they fight for those contracts and win those bids.
Yeah, I think the government contracts are why we are particularly drawn to this sector, because take a look at the U.S. budget. Defense makes up a huge part of the budget. That's one of the largest line items in the budget, and constantly the budget's increasing, and it's not one of the items that's looking to get slashed. So there's a lot of money for these major players in this sector to use to win these contracts, get some top line revenue and some nice net income, which will then turn to hopefully increasing that dividend.
A lot of money to be made and a lot of dividends to be paid. And that's what we're all about here. So my dividend stock that I'm going to introduce to you is none other than Lockheed Martin, ticker symbol LMT. Now Lockheed Martin, you know, as you'll see within just the background, you know, we'll have the links in the description, but you know, they've been around for over 20 plus years, formed in a merger, you know, long-term aerodefense company, and they have their hands in almost every sort of defensive pot, and they go toe-to-toe with the company that's in Bert's corner, again, on every single bidding.
Yeah, bring this over to my corner here now, Lanny.
Now entering the ring, we've got Bert the Hurt introducing
General Dynamics, ticker symbol GD, the major competitor, the dividend aristocrat, as we will talk more about later.
Of clout.
The Sultan of SWAT.
Yeah. No, we're not. The great defensive Beano.
Yeah. Yeah, I love, on a side note, that is one of my favorite baseball movies as well growing up. But General Dynamics is another massive Fortune 500 company. In fact, they are a Fortune 100 company as they are ranked number 92 on the Fortune 500
They may
list.
be 92 on the list, but they're number one in Bert's heart.
I don't know if they're number one. No, they're not number one in my heart. Johnson & Johnson is number one in my heart, as we love that company. You know that.
Maybe they'll make your top 20.
Yeah, well, they're higher than Emerson, which is one of my 5 always buy, and it's very close on the chopping block. But that's a different video for us to talk about. But yeah, we can't wait to compare Lockheed Martin to General Dynamics. So everybody get that coffee poured, get ready. Now we're gonna have our little Dividend Diplomats coffee mug here. We're gonna talk through the metrics. We're gonna run them through. Price to earnings ratio, payout ratio, their dividend history, and dividend yield. So buckle up, let's go.
All right, the first Dividend Diplomat stock metric, it's that price to earnings ratio. And again, this is taking that share price over that earnings per share, and we look at forward earnings per share because we're trying to see what they're valued, going forward, not backwards. So this metric is something that'll really show you if they are undervalued. And we compare this typically to the S&P 500 overall price to earnings ratio to see if they're undervalued in comparison to the market. I know personally I like a price to earnings ratio below 20, and if I can, below 18. How about you, Bert?
Yeah, I'm in the same camp. So right now the S&P 500 has a PE ratio that's absolutely insane. It's over 35 times, which compared to their historical mark of that 18 to 20 range, the market is trading at a very high multiple, and that's where Lanny pulled his 18 to 20 from that he was mentioning earlier. Historically, that's where the S&P 500 trades. We didn't make that number up, so we want to see our companies below the S&P currently and their historical mark.
Lockheed Martin, he's entering right now. The analysts are projecting going forward that earnings per share projection is a blistering $26.12. So if you do the math based on their share price of over $366, which seems insane that they're trading at over a $366 clip, but you divide that by that forward earnings projection of $26.12, and they actually have a low price to earnings ratio of about 14.
Yeah, that's insane. So it beats that historical mark that we were talking about. And on a side note, if you were ever looking for a company to consider for a stock split in the future, Lockheed may be getting up there with that 366 stock price.
Come on, brother. What you gonna do now, General Dynamics?
General Dynamics is not trading at $366 per share. They're at $156 per share. Their earnings is $11.52, and their price to earnings ratio is actually slightly cheaper than LMT. It is 13.5x. And that doesn't mean that just because their share price and earnings are lower doesn't mean it's a bad company. It's all based on the total market cap of the company and the number of shares you own as well. So there are different amounts leading to different share and earnings price. I just want to make that point quickly.
So fairly close price to earnings ratio. You got 14 with Lockheed and 13.55 with General Dynamics. I mean, pretty even keeled. Yeah. They both really win here.
Yeah.
I mean, GD edges Lockheed ever so slightly. I mean, we're talking.
It wasn't worth me throwing a punch at you there. I probably didn't need to do that. They're so close.
Don't make me bust out the Hogan leg drop on you.
Well, then you better win one of these metrics a little bit better.
All right, well, let's step in. It's time for dividend stock metric number 2, the dividend payout ratio. And the payout ratio is key because that's going to tell you how much of their earnings they pay out in dividends to you, the shareholder. We always want to look for under 60%, as Bert said earlier, because that shows that they, retain funds to grow their business and to advance new items so they can grow revenue and earnings. And we also do like that a payout does occur.
Yeah, and that's why we love that perfect payout ratio, that 40% to 60%, because it's that balance of what can a company invest back into itself so it can continue growing its earnings stream, but also pay shareholders a nice reward. I mean, sure, you could only pay out 5% as a dividend. Your dividend yield isn't going to be large. You can say you're reinvesting a lot of it, but as dividend investors, we won't be happy. So that's why 40% to 60% is that nice balance that we like to see with these companies. So Lanny, let's dive right in. What's Lockheed looking at?
All right, listen up, Jack. A little sneak preview again for the Hogan. The dividend Lockheed currently pays annually, and they pay it on a quarterly basis, but in total for the year, they pay it $10.40 per share. So when you divide that over that forward earnings of over $26, this dividend payout ratio is pretty much perfect, 40%.
Yeah.
Perfect.
Yep, that is on the perfect end of that perfect range. I'm going to keep saying perfect so you can understand just how perfect their payout ratio is.
Kurt Henning, Mr. Perfect, he'd be proud.
Yeah. Now, General Dynamics, they pay a dividend of $4.40 annually. So you take that and divide it by the earnings we discussed earlier. That gives you a dividend payout ratio of 38%. So
Oof.
Not perfect, but I don't think that's worth a leg drop. Maybe a little.
But what's nice is both companies, you can sleep at night. That dividend is covered.
Yep.
You know, their earnings can be cut in half, and that dividend is covered.
So think about that. So both companies pass this metric. They're very similar. They're right in line with each other. So we are happy, we are excited, and we are ready to start diving into this third metric.
So this dividend metric right here, this is going to be the interesting piece here, because I'm not going to be able to talk about a certain thing that Bert can talk about with GD.
Damn straight.
And you'll hear this here soon. So the third metric's the dividend growth history and the dividend growth rate on average. Now, Lockheed's no shy dividend growth stock here. They've been increasing dividends for over 17 years. That's not easy to do. And when you actually break it down, you know, we went through the financial crisis, we went through, that housing crisis, we've gone now through the pandemic, and yet they're still increasing their dividend. And they've been doing it over the last 5 years at an average of about 10%.
It's a great dividend growth rate. There's nothing more to really say about it. General Dynamics, on the other hand, while they take Lockheed's 17 years of dividend increases, they take that and they say, we're going to beat that, but we're not just going to beat that, we're going to be a dividend aristocrat on top of that, because they have increased their dividend for 29 consecutive years. So just as a reminder, a dividend aristocrat is a company that has increased its dividend for 25 plus consecutive years. However, Lockheed, I don't want to just completely bash Lockheed here. 17, as Lanny said, is a great consecutive annual dividend streak, and they are well on their way to becoming an aristocrat.
Let's go, Lockheed.
Yeah, and with that payout ratio, I would expect Lockheed to keep getting their way there next decade.
But what's GD's 5-year average growth rate?
This is where Lockheed looks a lot better.
What you gonna do?
It is 6.6% over the last 5 years. So not as strong as Lockheed, but still pretty solid. Not going to complain. I'll take it in 2020. I mean, dividends are coming back, so I would expect a larger one next year. But with all the stuff we've gone through with the pandemic, companies slowing down their dividend increases earlier in the year, 6.6 isn't bad.
So right now, before we get into that bonus metric of dividend yield, GD and LMT share very similar, almost identical metrics. Price to earnings ratio for Lockheed's 14. GD's is
13.5.
The payout ratio for GD
38%.
40%. Growth rate average
6.6%.
about 10%.
And then those years of increases? No.
17.
All right, 29 here, aristocrat, baby. And then the last one, let's throw in that bonus metric here, because what you're going to find is both of these companies are going to go in for the clothesline at the same time and hit it at the exact same time. And these companies are going to fall on the mat at the exact same time, because these dividend yields are...
Lockheed's is 2.84%.
And General Dynamics is 2.82%.
Think about that. Are these almost identical companies? Yeah, I mean, it's hard. It's hard to say that they're not. The yield individually is greater than the S&P 500 by almost a full percentage point. So that's positive for both companies.
Yeah, and so you take it back a step further with Lanny saying, are these both great companies right now? Their PE ratio, as we said, both are trading at a discount compared to the market. Both have fantastic dividend payout ratios. Both have strong dividend growth histories, dividend growth rates. And as Lanny just highlighted, dividend yields as well.
So the question here is, Bert, who wins the battle? Is it GD or is it Lockheed?
Well, it's not Boeing, but I honestly would say both are looking great right now. I can't pick a winner. If this were a boxing match, I'd say it's a draw, because Both are great companies and the metrics look great for each other. And what about you, Lanny?
I would say it's right down the middle. And this is a good tag team that it could be for that dividend stock portfolio of yours. These could be technically 2 dividend stocks to buy right now for you. If you were looking at both stocks and you didn't know what to do, buy both. If you have 1,000, do 500 each. If you had 500, do 250 each. Balance it out. You're getting an aristocrat on one hand with a lower growth rate, but you're getting one company with Lockheed at a higher growth rate on the dividend.
Yeah, and don't let their share prices intimidate you either from there.
Right.
I mean, they may not be the $30 per share company, but that doesn't matter in the end because that all gets even out, and that's why we look at the price to earnings ratio. So the metrics are looking great. I love Lanny's strategy of splitting up the investment and buying each.
Split them.
And then we'll take that tag team match and maybe put it against one of our other ones where we had a similar conclusion with the AT&T and Verizon. Pit that tag team against this tag team. Looks like we have a great dividend stock WrestleMania coming up.
So what do you think? We just went through Lockheed stats. We went through General Dynamics stats. Who do you think is the winner here in this battle? Leave it below here in the comments. And again, if you like this video, definitely give us a thumbs up. We appreciate it. This community is awesome. I mean, the fact that we are now cruising closer and closer to 3,000 subscribers is insane. Hopefully, all these videos do help you.
Yeah, and that's the ultimate goal of this here, is we're just trying to help spread financial education, teach you about dividend investing, dividend income, and growing that passive income so you can reach financial freedom one day. We're passionate about it, so we're trying to help you grow and get motivated to start making that very first investment because it'll make a huge difference once you start.
So these are 2 dividend growth stocks that you can consider buying now. 2 great dividend stocks that had a showdown. Not a clear winner here, but both look great for your portfolio. This is Bert and Laney from the Dividend Diplomats.
Over and out.